Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your morning European session outlook. We will start with the North American markets. The indexes recovered slightly due to gains on the WTI. The Dow is 12 points up and Nasdaq is 37 points up. The Dixie is down to 97.41 from 97.78. There were no major currency moves yesterday for the US dollar. Today's news could have a boost to volatility on today's charts, but most investors are taking the wait and see approach and will be looking to trade tomorrow's interest rate decision. However, the news for today is quite important. We have CPI data year on year, CPI x food and energy. We also have Bank of Canada Governor Poloz speech. All of those are Tier 1 news. We also have CPI month on month X food and energy, and the NAHB housing market index. Last piece of news is the Bank of Canada review. Alright, on to the EU markets. European Central Bank President Mario Draghi said yesterday that he expects eurozone inflation to reach the bank's target of just under 2% without undue delay, after it intensified its monetary policy measures this month. Mario Draghi also underscored the central bank's stance to be ready to intensify the use of monetary policy tools at its disposal to reach price stability in the common currency area. He said, a quote from him is, "Within our mandate, we have no limits on the choice of policy tools or the way to employ it," he said. "We can always bring inflation to our target. We must do it, and we will do it." End quote. Industrial output in the eurozone rose more strongly than expected in October after 2 straight months of decline, a fresh sign that economic growth may have picked up as the year draws to a close. Today, we will await the ZEW surveys for economic sentiment in Germany and the eurozone, as well as the current situation survey in Germany. In the UK stocks flipped into the red Monday, with the benchmark FTSE 100 unable to withstand a further sell-off in oil prices. That in turn weighed on energy producers. The UK's FTSE 100 fell 1.3% to end at 5,874.06, marking its lowest close since December 2012. The loss was its 8th in a row, the longest string of decline since a 10-day run ended in late August. We have a bundle of producer price index indicators as well as consumer price index indicators for today. All data is very important today, as it's a measure of the inflation. Alright, on to the Asian and Pacific markets. However, mostly everything is from the Pacific. From Australia, we had home price index quarter on quarter, which came out 2% as expected, but lower than previous, 4.7%. And the year on year come out 10.7%, higher than previous, which was 9.8%. We have the minutes from Australia. Australia's central bank said low interest rates are supporting household spending, and a weaker exchange rate is aiding local firms, even as it reiterated that a subdued inflation outlook gives scope to ease policy further if needed. Recent domestic data had generally been positive, and there was still evidence of spare capacity in the economy. Australia recorded its biggest back-to-back monthly jobs gain since 1988 after adding 71,400 workers in November, and consumer confidence has held up. There continued to be evidence that very low interest rates were supporting growth in household consumption and dwelling investment, and the exchange rate was adjusted to the significant declines in key commodity prices and boosting demand for domestic production. The underlying cash deficit will be 37.4 billion Australian dollars in the fiscal year through June, and for the years through 2019, the expectations are to the red as well. The deteriorating budget is due to revenue write-downs of almost 34 billion Australian dollars caused by falling commodity prices, declining terms of trade, weaker global growth, and the adoption of a more realistic domestic growth outlook. It is a fairly poor picture. This is the 8th consecutive year of budget deficits, and there is no return to surplus in sight. As a result of the minutes, we saw movements on the Australian dollar. Australian dollar against the US dollar, 90 pips up, 100 range. Against the Swiss franc, 100 pips up, the same amount of range. Against the Japanese yen, 130 pips up. And overnight, we will have the Royal Bank of Australia Assistant Governor De Bell is going to be holding a speech. Last sector for the day is commodities. Crude oil prices edged higher after pairing early losses in early Asia trade today, but the gains are likely to be limited as concerns of a swelling global supply and softening demand still weigh on market sentiment. WTI rolls with 70 cents at 36.03 now. Gold dropped 1.1% to settle at 1,063 and 40 cents an ounce. All right, everybody, thank you for the attention. That was all for today. I'll see you next time. Goodbye.